Welcome to Everything Money. In this video, we will analyze Baidu. We will show you the fundamentals and financials behind this company using our Everything Money software. And we will let you predict and show you how to predict what you should be paying for a company in terms of a stock ticker price. If you want to trade this company, you will join Mo toward the end of the video, and he will show you the trends and the charts on trading at a quicker pace. But first, why did you tune into us? Well, the thumbnail for one, but for two, I bring your normal person questions to a couple wealthy guys who manage over $100 million in real estate all over the world, Paul, stocks, and multiple businesses. This is not BS. This is real deal. We will show you a wealthy person's mindset in investing, and we will look at Baidu right now. Paul, what do you think about this company, this Chinese company?
Thanks, Uncle Seth. First off, guys, can you follow us on Instagram? We have a new Everything Money account. It's going great. And then also follow us personally so it helps our fragile egos out. So Baidu is China's #1 search engine, right?
Yeah.
I don't know much about them. In full disclosure, I do own Baba stock, but I've always been apprehensive about the numbers coming out of China. The reason I was okay with Baba was that somebody I respect very much, Charlie Munger, has bought Baba. I'm not buying it because he bought it. I bought it because I believed in the numbers and the company, and he believed the numbers. That's what mattered. I have no idea what his valuation is. So with Baidu, here's our exclusive Everything Money software. Click on 8 pillars, type in Baidu, click on it, boom.
A lot of these Chinese companies have been smoked
look
in
at
the
this,
past
Seth.
year, Mo.
340
killed.
This is exactly like Baba.
Well,
Yes.
if you look at if you
Go
look
ahead.
at any Chinese company, you're going to see this exact same thing.
And what's the reason, Mo? What happened?
Well, there was a lot of regulations going on in China. There was a lot of uncertainty about how the government was going to come in and start changing up quote unquote tax credits and how they help these tech companies kind of boost off when they just started.
Yeah. So this company's, Alibaba, they hit a 320 peak and then got down to 138. Look at Baidu. They were at 340 and got down to 137. I mean, it's almost photocopy in terms of stock price.
Yep.
So guys, let's do our analysis. $56 billion company. So remember Palantir, Seth, with $50 billion?
Yeah.
With 1.3 billion in revenue?
Yes.
18.4 billion in revenue. Palantir lost 1.3 billion. This one makes 6.9.
Not much of a comparison here.
So for $7 billion more, you can get a profitable company with 15 times more revenue. So our first pillar is we want the 5-year PE to be under 22.5. It is 17.5. That's a check mark.
Yep.
Look at the 1-year PE, 8.2. Look at these margins. Wow. Huge margins.
Amazing.
Pillar number
Two.
We want the 5-year return on invested capital to be greater than 9%. It's 0, and I think that's a calculation error. It's actually greater. The 5-year free cash flow. Let's see what the 5-year free cash flow is. Let's go to annual. Oh yeah, 2.28. That's incredible. Great. So they definitely have a 5-year free cash flow over 9. A 5-year return on invested capital over 5%, over 9%.
If you want this data behind Paul, we'll show you how to get it before the video is over. Keep going, Paul.
Income statement. We
Pillar
want to
number
go
3.
to
Yes, this is revenue growth over the past 5 years, our third pillar.
10.2 billion to 12.48. Not as much as I would have thought.
Check, please.
Because look at this growth here, Seth.
Yeah.
Imagine
2,
if
4,
you'd seen the
6,
company
8.
right here. You'd been like, this is going gangbusters. And this shows you guys, if you had been right here, all the hype guys would have been like, look at all this growth. And I'd say, hey, you don't know the future. Would you guess that would have happened? That's why the future is unknown. That's why you need to be conservative in your investing. I love these examples, Seth. Pillar number 4 is our profit growth of the last 5 years.
Yep.
2.1 billion, 6.87. How the heck did they have that gain? Wow. Let's see what the reason is. That's a big jump. Did they have? Oh, they had a 4 up. So guys, here's why you love us.
Tell me.
Because Uncle Paul's going to tell you when he sees this thing, he goes, "Wait, how did they go from 560 million in profit to 6.9 billion?"
Found them alike.
Other income and expenses. They had a $4.5 billion gain on income somewhere over here. No idea why. Just like last year, they went from 2.6 billion in profit to 560 million. They had a $2 billion write-off.
Perhaps they invested in Shiba Inu.
Yeah.
Could it have been a acquisition where they got to put that number on their books?
They might have sold this. They might have sold something.
Yeah.
They might have sold something, and that's what caused this. And this one
came
might have
on
been a
books.
write-off.
Right.
The whole point is, guys, if this is making sense to you, hang on tight and learn more. The numbers tell you the story. This is what's important here. These numbers will tell you the story. The numbers matter.
Pillar number 5 is shares outstanding. Are they selling off shares and diluting us, Paul?
So, guys, it's important that they are keeping the shares the same or decreasing slightly, especially on a cheap company. We go back to 5 years on the income statement, 347 million shares, to 348. That's an X. So very slight low. I'm not even worried about that. Doesn't bother me at all. Even though it's an X, it's so minor, I don't even care.
Pillar number 6 involves their debt. They want to know if the economy changes, they want to survive. They need to be able to pay off their debt to not be underwater, Paul.
Correct. So you go to the cash flow statement. You find their 5-year average free cash flow number, 2.28 billion multiplied by 5. It's $11 billion. We want their long-term liabilities to be under $11 billion. So you go to the balance sheet. Scroll to the bottom. Ooh, I'm actually surprised by this.
How bad is it?
$14 billion. That's a lot.
That is a lot.
For a online marketing company, huh?
That has only $18 billion in revenue. That's a lot.
I mean, they're not making a physical product. They're not putting anything on their shelves.
They took a lot in the last year. Look at this. This is a big jump in the last quarter, I mean.
Yeah, that is a lot because I'm pretty sure Google's long-term liability was $41 billion.
Yeah, and Google does.
I
mean, hundreds of. I mean, that's insane.
Exactly. That's why I look at that. I'm like, man, that's a big number.
The big mamma jamma, pillar number 7 is free cash flow, the most important pillar. This will lead to what market cap we want to be paying for Baidu. Go ahead, Paul.
So pillar number 7, we want to see free cash flow growth. Now, free cash flow is cash from operations less your capital expenditures, right? You can do that. You can do 5 things with that: buy back shares, pay dividends, make acquisitions, pay down debt, and invest in your own business. So we go to our software, cash from operations, capital expenditures. I added this line to the cash flow statement to make it easy for you, because I'm all here about making life easy for you. 1.87 billion to 2.95. Look at the cash flow statement here. This tells a much different story. We saw this fluctuating profit, because remember, earnings can be manipulated based on SEC rules, accounting rules. Cash flow is a lot harder. We have a check here. Our final step, we take the 5-year average free cash flow, we multiply it by 20 as a starting point to get a market cap. Do we want to pay this number? So 2.28 billion times 20 is $45 billion, let's call it. The current market cap is?
56 billion.
So that's an X, because the market cap is higher than this price. Now, does that mean don't buy it? Of course not. What it means is just, okay, let's go look at more information. What's the information? Well, a faster growing company should get a higher return, should get a higher multiple. Now, for this company, it's a little bit hard on the 8 pillars. Let me show you another company with our 8 pillars, something similar. Let's go to Google. 8 pillars. It'll tell you all the numbers here. It just shows you all the numbers here. As an example, they had over 5 times their free cash flow in debt. Google's is 1.17 times. That just goes to show, but this will all do the math for you. Now, why did I create the software? Our subscribers kept saying, you're doing all this data.
How do we get it?
How do we get it so we can do work on companies that you're not doing? Because we can't wait for you to make a video. So we created the software. You get everything you saw here. You get it in mobile form. It's a mobile app as well, all in its current form. You get access to all 3 of us, Seth, Mo, and I. You get exclusive daily content. This is content to us every single day. You get every extra to the software. We're making all these extras here that are coming soon. This is all going to be included for whatever you sign up for. Even if it's not available right now, you get it as it comes out. And you get, most importantly, if you feel like you're on an island and can't talk to anybody about investing, there are currently 6,000 people who buy the software. Join them. You get into our chat. You can talk about all your investing ideas, talk about things, split up research. It's happened. We have people who are friends with each other from all over the world talking about investing, because it's all about the community. All of this is only 90 cents per day. Less than a cup of coffee, you get all of this. Yep. Your goal, if you're able to either increase your returns by 1 or 2% a year or decrease your losses by 1 or 2% a year, this will pay for itself. You'll make hundreds of thousands, probably millions of dollars extra in your lifetime by doing that. And it's only 90 cents a day. 2 ways to sign up: everythingmoney.com or Patreon. Either one's fine. You get access within minutes. But the benefit of everythingmoney.com is you don't double pay the first month, and you don't pay sales tax yet because we're not big enough. So sign up now. It's a no-brainer. But let's go to the most important part. Why do you think this is the most important part, Seth?
Well, this is what, as a new investor out there, you might be thinking, I just buy a company for a random ticker price and then I just hope. I did this for a decade, Paul. Just buy something and just hope it goes up. I got lucky on a few. I got unlucky on a few. But the stock analyzer tool helps you take all this data and then predict the price we'd like to pay to get an expected return. Am I wrong, Paul?
Nope, it's correct. Every investment is a present value future cash flows. We don't know the future. We have to make assumptions. The stock analyzer tool will ask you for your assumptions. So I first pick 10-year outlook, and I pick low, middle, and high assumptions. It tells me all my 1, 5, and 10-year numbers, and I make assumptions from there. So as you can tell, the revenue growth is decreasing, so I'm going to be conservative. 6, 8, and 10% revenue growth. Issuing shares, 2, 1, and 0. Profit margin, I'm going to do 20, 23, and 26%. Free cash flow margin, I'm going to do 15. I'm going to do 13, 15, and 17%. PE, 10, 13, 16. Same with free cash flow. Now for my return, my desired return. This is the return you want to get in this investment. If you buy an ETF following the market, it's 10% a year over long periods of time. So you need to get some sort of premium for that. I put in 12.5%. I hit the analyze button. And guess what, guys? It's pretty much in the middle.
Check, please.
Look at this, Seth. So this is basically saying, if you believe my middle assumptions, you're pretty much right there. This might be a buy right now.
Yeah.
So the question you have to do is, are you going to do more research now because it falls in the right area? Imagine if the stock price was 1,000 and you went and learned all about the company today. And then you go, oh, shoot.
I need to pay $150.
I need to pay $150. I just wasted a bunch of time. But it's okay. Go listen to those other YouTubers who say, understand the company first. No. Now, because it's in your wheelhouse, now go understand the company. Now decide if you want to own it. Don't waste your time doing the other way around. If you do that, you're going to waste your time and you're just going to lose more money. So, based on this, if you like all the numbers and like the company, it's a buy today.
If you're interested in trading Baidu at a quicker pace and you're drawn to charts and more rules-based trading, Mo will help you in the Bid and Ask Nation. Join him now as he shows you what's going on with Baidu. And look at that little sweet spot there, Mo.
Yeah, so this is a perfect example of why you use tracker shares. You saw everything that happened in China. You had this big decline, and then it just went on the bottom in June, the stochastic, and it just went sideways as the price just kept coming lower and lower and lower. Maybe you bought a tracker share here, and all of a sudden, now it's starting just to peak up there. This is still not on people's radar. I'm telling you right now, these Chinese companies are still not on people's radar, but you are seeing that the trend is finally coming into the sweet spot. So if we can just get a little bit more upward trajectory, you're going to be entering here around 184, 185, somewhere in that range. And that just gives you the benefit of being in there so early that you beat the crowd and you make even more money and you're confidently making that money. Now, if you want to do a swing trade on this, you're stuck at the 100-day moving average. You could see that it kind of popped over the 100 and it fell right back down. So what do we need to get above that? We got above it right here, Seth, because we had this volume right here. And then the volume kind of declined and we fell right back below that moving average. So what you're going to need is to confidently get up here is a lot more buying volume. And when that happens, this stochastic will turn up for you and you'll probably make a run towards this 200 range of the 200-day moving average. So if you like these patterns, if you want to trade at a quicker pace with swing trading, or you want to do something long-term and you're a very busy person, we have the weekly chart for long-term trading. Come and join the Bid and Ask Nation. You'll learn all my rules. You'll get all my teaching videos, and it's a great place to be if you want to do that.
If you're finally serious about investing, join Everything Money, get the data, and start knowing your trades even better, and Mo can help guide you. That's our take on Baidu, an interesting company. We will keep you updated as we move forward. Thanks for watching, and we will see you next video.